Hello, good morning. You're watching News9. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. As usual, with me to my left is my colleague Kartik Malhotra. Let's quickly begin with markets, Kartik. Third straight day, markets opening in green.
And what a rally this morning, Shweta. Markets are up. Otherwise, we've seen this trend of 0.1%, 0.2%. Markets are up almost 0.5% this morning, and all major indices looking in the green. Very positive start. Let's look at sensex, Nifty, Nifty Bank, Nifty IT, all up about 0.5% or so. The broader markets, Nifty Bank up almost 0.65%, Nifty IT up about 0.7%. The rally in the small caps and mid caps has been even better. So small caps this morning were up about 1.5% or so. Overall, the mood of the markets is looking good. This is coming despite the fact that overnight we saw crude prices go up, and the major two blocks in the US that produce crude, you've seen the prices per barrel going up to as much as $84 dollars per barrel. Despite that, markets have not taken much of a hit this morning. Overall, I think some positive cues coming. Of course, the deferment of the hearing of the Adani Hindenburg case, has not seen any action, much action on the Adani stocks. We've seen all the announcements made on Reliance Jio Financials. All of those have augured well for the markets. We've seen both Reliance as well as Jio Financial Services opening in the green this morning. Add to that, there is news coming in from JSW. JSW has, of course, now apparently officially made the bid to acquire the Chennai plant of Ford Motors, which had packed up, shut shop and moved out of the country about 2 years back. So that idle plant is being picked up by JSW. In addition to that, there is news coming from Zomato as well. And after Tiger Global, we saw SoftBank also doing a block sale of about 1.17% that it held in Zomato. So even the Zomato stock in green early this morning.
All right. And so a flurry of news there and a flurry of stocks that we will be tracking. With us at this point in time is Kush Bohra of kushbohra.com. Kush, thanks very much for taking time out. Good to have you back. Markets opening in green, positive cues. In fact, markets all across the world, Hang Seng is up, Dow Jones is up, S&P is up, closed in fact 0.5% up last night. It's a positive start.
Guys, first off, thank you for having me on the show. It's really good to be back. You're right, and let's not forget the fact that the markets were consolidating in a range. Well, they still are. I mean, we're still within that range of 19,250 to 19,550, very close to the 20-day and the 50-day moving average on the Nifty. 50-day moving average on the bank Nifty. So we might be looking positive, but if I look at it from a slightly broad perspective, we're still in the tight range. For me, a happy note will be if we end above 19,500 or 45,000 on the bank Nifty. That is when I will say it's a cause for cheer. But we can always celebrate the green on the screen that we're seeing right now.
All right. So markets, of course, continue to be range bound. Nifty was up almost 19,400 this morning. So reaching there, Kush, just in time, reaching there. Let's quickly move to stocks that are in action today. And, let's quickly begin with one fact. What my colleague Kartik here pointed out is the JSW stock, and more news coming in by the way of JSW. We know that they are foraying into the EV market. They're looking very actively, partnering with MG Motors, trying to be, in fact, majority stakeholder in the India subsidiary of MG Motors. Now in the latest, they're also acquiring a Ford factory in Chennai. All of that, Kartik, augurs well for JSW, and also I think strengthens their position in the EV market, makes them one of the strongest bidders, in fact, and the latest entrant.
Absolutely. So, I think the automobile batch has been restricted with X number of players, and that market has not really expanded over the last many years. You haven't seen another domestic Indian car manufacturer emerge. With JSW now foraying very clearly into the auto space, now we don't know whether this is going to be an EV only space. It makes sense to have, let's say, an EV stack, lining up for JSW with talks with MG Motors, and MG Motor, of course, has a large variety and depth of EV vehicles out in the market. But that's not all. You're also now looking at the Ford factory being picked up by JSW. One thing is very clear, that JSW wants to be another entrant in this really booming, buzzing Indian car market. We've seen auto numbers, 2 million cars sold in the first half of the calendar year 2023. So JSW, largely known as a steel magnate, a steel conglomerate, we are looking at a case of forward integration this time, not a backward integration. With Tata Motors, it was forward integration because Tata Steel was an up and running profitable business. And Tata Motors integrated with Tata Steel and had costs really, compete with the likes of Maruti. But with JSW, again, we are seeing this forward integration happening, that you are a steel magnate, you are a large company that makes steel being an important component that goes into auto manufacturing. And therein forward integrating your businesses, getting big time into the auto space. And we've seen all the buzz around EV as well. MG Motor is facing stiff headwinds from the Indian government and is unlikely to continue operating as MG Motors without an Indian partner holding some sort of a stake in it, because we don't want a Chinese company to make in China, sell in India. And with JSW now acquiring this steel plant, acquiring this Ford plant in Chennai, or making a bid to acquire that, and partnering on the technology side by picking up stake with MG Motors, we could very well see an MG JSW brand emerging from India and making in India using perhaps the technology that MG Motor has already. But very interesting story here of a non-auto brand and not as diversified a group as, let's say, Tata, getting squarely into the automobile industry.
And what does it really mean for the stock and for the competition, Kush? Tata, in fact, Tata EV, and it's the rebranded entity of Tata.EV, a fresh one at that, where Tata is hoping to roll out more than 10 models in the next 2 to 3 years. That's the timeline they've set for themselves. JSW making its bid for the EV market, more and more players, competition heating up. What does it mean for the segment?
Well, I can for sure say that it means interesting times for, consumers like you and me ahead. But yeah, see, I think this is the much needed push that the stock needs to, now break out. We've seen a stupendous rally on the stock from about 400 levels to 600 plus. So, we're talking what need 50% return in less than, a 5 to 6 months time frame. Now, what next? Tata's been the pioneer in the EV space in India, and, it's already reaped benefits from that. But from here on, it needs a fresh push. So I think this is, something that will augur well for, the investors of the stock. Someone wants to accumulate at these levels, not a bad idea. The stock's in a consolidation mode. I won't rule out moves to 660 and even 700 levels in the coming months. So, good times ahead. As far as and the JSW, news I was listening to, it might take some time for it to translate into, numbers and ground reality. But all in all, again, the competition is actually, as I said, a good time for, consumers like us. JSW Steel, the stock actually has been making a base. But as I said, this news perhaps will take some time to, reflect in the numbers and hence the stock price.
All right, will take time to reflect in the numbers, but I think good story there as far as the EV sector is concerned. A great story at that, Krishna, unfolding. Krishna Kumar, of course, joining us here in the studio. A great story there unfolding, by the way, of the thrust on EV space. Two-wheeler, four-wheeler, more market, more players coming into the market, more competition heating up. I think Kush is right. It means well for us at least.
Oh, absolutely. And it's coming. We're discussing this by less than 24 hours since the launch of Tata.EV, which is their brand new separate EV company that they've sort of hived off from their passenger vehicle mobility. And you get a group like Tata Group is looking to do 50% of its sales to be electric vehicles by the by time 2030s roll around. So from sort of a company like Tata to just about all the other companies which with their EV4, even a company like Mahindra & Mahindra, which is traditionally a diesel car maker, now getting full-time into the electric vehicle space. Who would have thought there's a Mahindra Thar EV that is now available in the market, and so is the EV versions of other ones that Mahindra is looking to launch. So from the premier car companies in India to to the likes of MG, which is now willing to sell their EV, their compact EV, which is the Comet, with a buyback plan as well. So there is a lot afoot as far as Indian companies and selling electric vehicles in India is concerned, be it four-wheeler or two-wheeler.
Right, a lot more offerings in the market, a lot more choices for consumers to pick up from. I think all in all, good news there for not just auto players as competition heats up, but essentially for people who are hoping to buy an EV
and what's
very,
interesting
very
is,
soon.
Shweta, that these EVs, especially the two-wheelers, are not just two-wheelers being bought by end consumers. Look at all the quick delivery platforms, quick commerce platforms.
Which is what's driving their sales at this
Absolutely.
point.
And bringing down costs.
So, unit economics, the profitability on every order is actually now going up for the likes of, let's say, Zomato or Swiggy.
And
or
Zepto.
even Zepto, which has just turned a unicorn. Simply because your cost per kilometer of riding an EV is much lower than cost per kilometer of riding a traditional fuel-based scooter.
Same with the maintenance and all the other paraphernalia that goes with having an automotive vehicle.
A nice engine automotive vehicle. All right, so space there heating up, of course, and we'll bring you more updates. But let's shift focus to a stock that we're tracking since yesterday, and that is Zomato. Zomato's been up, it's been rallying. After Tiger Global, another investor is in fact letting go, diluting its stake in Zomato. Stake, in fact, it acquired after acquisition of Blinkit. It means well for Zomato.
At least it's reflecting very well in the price of Zomato this morning. Zomato stock was up about 1.5% or so, not nearing its 100 rupee mark. And I think in trade today, we should see the stock maybe touch the 100 rupee mark finally. Of course, Zomato, as we know, listed in April or May 2021 and had taken a massive beating immediately after its listing. Now, a lot of its original shareholders, including angel investors as well as venture capitalists, continue to be invested in the stock, and that investment period ended last week. So they could now freely offload their stake in Zomato, and they were legally clear to offload their stake, and that is what we started seeing. It started with Tiger Global, it moved on to SoftBank. And now there are talks that there could be one or two other investors also who hold some sort of blocks in Zomato, finally offloading them in the open market. And that is seeing a positive impact on the stock of Zomato. Remember, Zomato also turned profitable last month, of course, on account of a technical sort of, book accounting, not literally cash flow, as we
Positive,
call it. So there was, of course, a long-term depreciation, asset reallocation, etc., which lent the stock and the profitability of the company to sort of go in the green. But overall, yeah, I think good times for quick commerce with a startup listing, becoming profitable, stock price moving in the right direction, and investors who were part of the initial journey of a startup like Zomato, seeing some value in not holding on to the stock but actually selling it and taking their profits back with them.
What does it really mean for food delivery segment and for apps that are delivering food at this point in time? Not just delivering food, quick commerce too, Kush. I mean, look at Zepto, the first unicorn of this year so far, and valuations are looking good, numbers are looking good. Could you perhaps apprise us on what yours at this point? How do you feel Zomato stock will be moving in near months to come? Is it a buy? Is it a sell? And the quick commerce and the commerce delivery apps in general.
So, if I jog my memory, a little, the last time I was here, we started the discussion with Paytm. And, I put Zomato stock on the radar precisely for this reason that, the stock has actually now recovered very well from the lows and now is in a space where you could comfortably, look at a trading bet also in this stock. Now, if I look at the last few months move, the stock's actually respected the 20-day moving average for the most part. In fact, as a part of our advisory service, we recommended this stock for targets of 99 and 103 for the near term. The target 1 seems to be hit, on course to hitting target 2. But, as I was listening, if someone's got a positional bet in this, someone's bought it at around, those 130, 140 kind of levels where we had seen a lot of accumulation happen when the stock started to fall from 170 levels, the listing levels. I think those levels are also in sight now. It might just take some time, but I think, 125 to 130 levels are also in sight. So I would actually suggest a fresh entry also in this stock. Now, as far as the entire space goes, the entire space has actually been doing well. The likes of Paytm, maybe Policy Bazaar also already moved and then, went into a sideways mode. But the two stocks that I have on my radar from this space are Paytm and Zomato. And looks like, it's steadied, the ship steadied and, good times ahead.
So talk to us about ONDC. Kush, do you see ONDC to be a game changer? Because Zomato has its own tech platform, Zomato has its own logistics arm, but Paytm and Paytm Mall of course cease to exist. But Paytm, we've seen the food delivery vertical of Paytm is now riding on ONDC. So do you see ONDC, Kush, to be a game changer when it comes to business operations of Zomato, let's say, versus Paytm, which are both your stock picks?
Not really, and I'll give you a very simple reason. When Jio Financial Services was announced, Bajaj Finance took a beating, and how, right? My point of view, my view there was very simple. Also, let me just add one more case in point. Asian Paints, a lot of companies, I think including JSW, they announced their foray into the paint space, and Asian Paints took a knock. Let's not forget, these guys are leaders, and they've stood the test of time. They know how to manage competition, how to manage the market share, all of that. Now, while some competition will probably hit the margins by a little bit here and there, but the way I see it, the way India story is shaping up right now, this will only expand the market. So I don't really see ONDC denting Paytm, Zomato, or any of these businesses by a whole lot. If at all, as I said, it'll probably just expand the market, bring more consumers, bring more clients on the on board. But I don't really see the leader sort of taking such a big knock. And again, like we mentioned about JSW, it'll take time for these ideas to translate into numbers. So I'll wait and watch. I don't see this as a very big dent just yet.
Kush, the last time we spoke about Jio Financial Services, since you mentioned that in the example with Bajaj Finance, last time when we spoke, neither you nor I, nobody practically apart from I think the Ambani family and some of the investors, knew about what the game plan for JFS looks like. Now there is far more clarity. There is an NBFC division, there is an AMC division, there is an insurance division.
And that brings more confusion.
And Jio continues to be a telecom service. So different regulations, different regulators, different businesses within this larger Jio conglomerate, not just a Jio brand. So now how do you see, Kush, how do you see JFS? Because it has very well broken out of its initial estimated price band of 160 to 190, and this morning has even breached the 230 mark, which was slated to be a good high point for the JFS stock. So now with so much clarity and a little more confusion, and add to that the lower circuit cycle broken to a point that now we're talking about upper circuits.
Yesterday.
So 231 this morning in opening trade. What is it telling us?
So when you did mention we now have clarity, and I was just going to mention, do we? I don't, at least. I know there is still some time before this will again translate into action, results, numbers. See, we know why the stock has actually rebounded and hit two upper circuits yesterday and today. It's promoter buying, it's the family group buying. Of course, this does show that there is a lot of confidence that the promoter group has in the share. But I'm not sure if the entire ETF selling is over just yet. There are still some hangovers that the stock has even around the business, and also in terms of the ETF selling. So for me, while this does make sense from a long-term perspective, if I'm looking at position sizing or capital allocation, I will go ahead and pick it, but I won't allocate too big a part of my portfolio to this one just yet. I would rather bet on the listed entities, or rather the ones that have been listed for a while now. I will make an allocation to it, but not too big. So that's my that's the strategy that I will have when I park some money in Jio Financial. I haven't done any yet.
So technically, how are investors looking at it? I understand, I think the surge in prices today has happened on account of a block deal, which we assume could be the promoter family or could be, some other partnership that Reliance has or Jio has cracked with investors who've picked up a block deal in Jio. But how are investors looking at it? Technically speaking, is it a fundamental pick only because we know it comes from the Reliance table? Had it been any other brand, had it been any other company demerging into something as ambiguous and details of which came so much later after the news of the demerger broke, do you think markets would have reacted differently? I'm sure they would have reacted differently, but is it primarily right now just a fundamental pick and people want to invest in it because they were anyway invested in Reliance, and that has only been broken up into
Kush,
JFS?
One more question if I can add to it. Is there any Indian company that actually ends up being reporting to 3 different regulators?
4 actually.
4 different regulators.
I'm really not sure on that one. Actually, I'll probably have to dig up something like that. That's probably a trivia for me to go home and work on. But no, you're actually right. Let me put it this way. Uh, it's not even a fundamental pick yet, as it is a reputation and a brand bet. You're right. Had it been any other, had it been from any other stable, from any other name, I am not sure it would have commanded the same kind of, interest also, let alone, the kind of buying that we're seeing right now. So for me, this is definitely banking on the brand, the reputation of the, Ambani family, Mukesh Ambani. In particular, we've seen the kind of wealth creation, that has happened, under his, umbrella of stocks. So for sure, there is that backing. Even from fundamental perspective, look, if I do a fundamental analysis also on this one, I need some numbers, right? And they don't seem to stack up just yet. So I will wait on this, and I will just fall back on my trading style and my trading strategy rather than any kind of analysis just yet.
Wow.
All right. So no analysis, ambiguity prevails. We don't know whether there's going to be any clarification coming up anytime soon.
Know the name.
What was hoping to be or what was anticipated to be a clarification did not really clarify much, did it? But we'll of course have to wait and watch out.